Hi everyone, welcome back to the US individual taxation classes. In this particular video, we are jumping on chapter 3 of the Enroll Agent Part 1 examination, which is Deductions and Tax Credit. In this particular video, we are starting with the deduction. There are two types of deduction, standard deduction and itemized deduction. So let's understand more in detail about the deductions applicable to the individual like you and I.
Combine the limit if you have multiple mortgages taken in different year. You must reduce the limit of loan taken out after December 17 by the amount qualifying debt subject to 1 million limit. Next is home mortgage points. The term points is used to describe certain charges paid to obtain the home mortgage. Points are prepaid interest and may be deductible as home mortgage interest if the taxpayer itemizes the deduction on Form 1020 Schedule A. Then taxpayer can deduct all the interest on his or her mortgage if he or she may be able to deduct all the points paid on the mortgage. If taxpayer acquisition debt exceeds the applicable limit, the taxpayer home equity, he or she cannot deduct all the interest on his or her mortgage, and he or she cannot deduct all his or her points. So look at the pointers. I think that's a theory. So I think this pointers is important. A taxpayer can deduct the points in full in the year they are paid if all of the following requirements are met. So what you need to keep in mind, these requirements. If these requirements are met, then you can deduct the points. Otherwise, you cannot. First one is the loan is secured by the taxpayer main home. Secured by the taxpayer main home. So you have given a loan to the taxpayer on the security of his or her main home. A taxpayer main home is one where he or she lives most of the time, right? We discussed above. Second is paying points is an established business practice in the taxpayer area. So paying by points, like normally some of you might be using credit cards, right? How many of you are using credit cards or debit cards?
Debit I'm using.
Debit you are using. Credit card, how many of you are using?
I'm a student, sir.
I know. How about others? Do you guys are using any credit card?
Yes, sir.
Right. So when you swipe your credit card or debit card, I'm sure you might be getting some reward points,
Cashback.
cashback or reward points, right? So this is saying you can adjust those reward points with the loan balance, with the loan repayment, or with the interest repayment of the loan. That's what it means. Is make sense? Yes or no?
Yes, sir. So majorly it's like some like the big businesses use the credit card, so that to get more cashback or something or points to
Yeah.
get more rewarded. So this thing connected like paying a points with big
Yeah.
businesses.
Yeah. So, Shubham, do you have like any Bank of America or any such bank card for US?
Amex card
Yes,
something.
I have American
Right.
Express.
So you have American Express or Bank of America, right? Whenever you do any expenditure, I'm sure you might be getting a reward point, which is being redeemable in cash also,
Yes,
right?
sir.
Right. So that redeemable in cash, or you can adjust against the loan interest payment.
Yes.
Right. So that's what it means. If you are earning those points on your expenditure, that you can adjust against the interest of the loan. So then those points is also being considered as payment of interest. That's what it means in nutshell, if I say. Right. Just to simplify to each one of you, all the reward points, payback points, right, or cashback points, which you are earning, if you can repay the loan interest from those points, then that points payment through that points would be considered as payment of interest, and that is being eligible to consider for itemized deduction. Make sense now?
Yes.
Mayank, Rajat?
Yes.
Okay. The taxpayer use the cash method of accounting. This means he or she report the income in year he or she received. It is deduct the expense in the year he or she paid. So generally, individual in US, they use cash basis of accounting. Cash basis of accounting mean when they are receiving money, they are booking income. When they are paying money, they book the expenditure. Hence, the deduction of expense in the year he or she pays. Right? Make sense? Are you guys with me?
Yes, sir.
Yes. Yes.
Okay, the points were not paid for item that usually separately stated in the statement sheet, such as appraisal fee, inspection fees, title fee, attorney. The fund of taxpayer provide before closing plus points seller. The taxpayer used the loan to buy or build his or her main home. So taxpayer has taken the loan to buy or build the home, right? The points were computed as a percentage of the principal amount of the mortgage that proportionate you will be giving. The amount is clearly shown as points on the taxpayer settlement account. Next is investment interest expense. Investment interest is the interest expense in any amount that is paid on loan proceeds used to purchase investment on security. Investment interest expense include margin interest used to leverage security in a brokerage account on a loan used to buy the property held for investment. An investment interest expense is deductible within certain limitation. First one is investment interest deduction is limited to the amount of investment income received. This is very important, such as dividend interest or investment interest is reported in Schedule A or Schedule E. So two things here. What they are saying, you have purchased some investment from borrowing of money, right? And on the borrowing of money, you have interest expenditure. That interest expenditure you can claim as itemized deduction only to the extent of the amount you have earning from those investment income. Make sense? Are you getting my point? Let me do a quick example for you. For example, you have taken a loan for investment. Let's assume you have taken $80,000 loan, and let's assume $100,000 loan. You have taken interest at the rate of 5%, right? How much is the interest? Let's multiply by 0.05. $5,000. Yes.
Yes, sir.
And now you have made an investment of this entire amount, and you got earnings. You got earnings $4,000 or you got earnings $8,000. Let's assume these two scenarios.
So that investment of 1 lakh,
Mhm.
it 1 lakh or it is adding interest or
No, like you have borrowed $100,000, and that $100,000 you have invested, right? This money you have borrowed, and that money you have invested. Let's assume you purchased any stock or mutual funds,
yes,
right? On this, you have a fixed interest which you need to pay $5,000.
yes, sir.
But on through this investment, One scenario is that you have earned $4,000 income. The other scenario is that you have earned $8,000 income, right? So in both the scenario, what is the maximum interest expense is being allowed as itemized deduction? So which is lower of these two, earnings or the interest? So in this case of scenario, maximum allowed interest is $4,000, right? And in this case is $5,000. Make sense?
Yes.
Rajat, Garima, Divya,
Yes, sir.
got it? Any doubt?
No, sir.
Okay. So if you go back to the notes here. So we have covered standard deduction, and in the itemized deduction, we have covered medical and dental expense. We have covered state and local taxes, and we have covered home loan interest expense and premium, right? Next topic we need to cover is charitable contribution, investment expense, casualty and theft losses, travel and entertainment deduction, right? So we can take a pause over here, and then in next class we can cover rest of the three items. So this section, I'm sure, like this chapter is not very difficult because we already cover at high level almost all of these things. So you guys can go ahead and start doing practice of entire chapter 3, right? And wherever you have any question or doubt, you can just drop into the group, so that in the next class, first we'll be taking up those questions, and then after we'll be moving forward, right? And this chapter will not take too much time, probably 2 more classes or 3 more classes at the max, we'll be done with this chapter, right?
Yes.
Yes, sir.
Okay, so thank you everyone.